Hi, I'm Tom Lydon, editor of ETF Trends here in Hollywood, Florida at the Inside ETF conference. And I'm here with John Forlines, who's Chairman and Chief Investment Officer of JAForlines Global. John, great seeing you.
Nice to see you again, Tom.
Well, ETF strategists are a growing area of the ETF ecosystem. We talk to a lot of ETF issuers today, but you folks actually are practitioners. You utilize ETFs in different portfolios for other advisors. Tell us about that.
Well, I'll tell you one thing. It was very lonely back in 2009 when we started this channel. I remember specifically 6 or 7 pages in our deck to go to advisors to talk about what an ETF was and what it did. And now we're down to 1. Yeah. So that's a sign of progress. Along the same time, you've gone from 500, 700 billion to 3+ trillion in ETF issuance, and that's provided us with a whole lot of tools and ammo that we didn't have before. So building those portfolios and then getting on the broker platforms is a real huge part of what we do.
So you've obviously benefited from the rise in popularity of ETFs, but do you find advisors, if they've made the shift from maybe actively managed mutual funds to ETFs, they find that they need a little bit more help and support, especially as they might be looking down the tunnel and seeing some volatility?
I think that's right. There's been disappointment on more than one front with the actively managed mutual funds. It's not just that they didn't protect during the downside when it was needed. It's also an expense issue. Yeah. So building a portfolio of low-cost ETFs is essentially a lot cheaper than doing bottoms-up stock and bond picking. If you compare us to the universe of tactical allocation folks or world allocation folks, we're a third or a quarter of the cost, and that's a big part of attribution. Right. Getting the calls right is important, but when you're low cost and the ETFs are a big part of that, it's a great deal.
So as you look at the market for 2017, where are the opportunities and where might be the headwinds?
I think the opportunities are anytime you're in what we call reset status, and the U.S. is in one, where it's a new regime that's promising fiscal changes that the old one wasn't prepared or couldn't get done. Then I think that's going to throw off opportunities, and they may not be in the places everybody thinks. So, for example, I always thought Mexico was a great place. I just thought it was too volatile, and now it's been beat up so much by all the rhetoric from the incoming administration. It's not a bad place to be. It's one of the cheapest places to buy blue chip companies in the world. It's a perfect example of some place you might not think about when you think about 2017.
Yeah. So you're available on a lot of platforms. If advisors are interested, they can call your firm, and you actually have teams that will sit down, look at their portfolios, look at your portfolios, and see how they might blend.
Yeah, when we started, it was more of a white label for advisors, and the first wave were sort of former advisors as portfolio managers who still wanted to be the smartest person in the room, and we always say we want our advisors to be the smartest person in the room. So we'll still work with you. We have big internal teams that can do that for branches and individual advisors.
Yeah, absolutely. John, as always, great seeing you.
Nice to see you, Tom.